Welcome back to Investing Talk Podcast. So glad you could join us today. We're tackling a question we hear a lot. Is Cognition Therapeutics a good time to buy now? Our goal here is to really unpack what's going on, look at their recent performance, financials, what's coming up, and of course the risks. We're pulling this all together from their latest filings, analyst reports, clinical updates, trying to give you the clearest possible view. And hey, before we really jump in, if you find this discussion helpful, please hit that subscribe button, give us a like, maybe leave a comment. It really helps us bring you more analyses like this one. And if you feel like supporting the show, you could consider buying us a coffee, link below. Also, definitely let us know in the comments if there's a specific company you want us to look into next time.
Absolutely. And with a company like Cognition Therapeutics, you really need that full picture, especially, in the biotech space. It's just so volatile. So yeah, we're going beyond just the headlines today, giving you that deeper perspective you need for these kinds of decisions.
Okay, let's kick things off with a look back. The last 3 months for Cognition Therapeutics.
Huh.
Quite a ride, right? What were the key moments shaping things?
You're not wrong. It's been eventful. So back in June 2025, they hit a pretty big milestone. They announced they'd passed 50% enrollment in their phase 2 START study. That's for early Alzheimer's.
And that's significant because...
Well, it shows good momentum in the clinic. Running trials efficiently is crucial for these companies. They also kept their expanded access program going for dementia with Lewy bodies or DLB that showed continued interest from patients and doctors, which is always a good sign. Then financially, their Q2 results came out early August, showed a net loss of about $6.7 million.
Which sounds like a lot, but maybe expected.
Exactly. Pretty standard for a clinical stage biotech burning cash to fund big trials. But yeah, it highlights the burn rate. Now, July 2025, that's where things got really interesting. July 9th, they had this key meeting with the FDA. End of phase 2 for zervimesine.
Zervimesine, that's their main drug candidate, right,
Yes.
for Alzheimer's?
That's the one. They discussed the SHINE trial results for mild to moderate Alzheimer's, really setting the stage for a pivotal phase 3 trial. But then, just a week later, July 16th, boom, positive phase 2 data from another study, SHIMMER. This one was in DLB.
Ah, dementia with Lewy bodies, okay.
Yeah, and the stock jumped almost 20% on that news. The data showed real improvements in behavior, cognition, motor function. These are areas with hardly any approved treatments. Huge unmet need.
Okay, a 20% jump is serious. But I seem to remember they didn't quite stick.
You remember correctly. The market giveth and the market taketh away, right? That positive feeling faded fast. After that FDA meeting, the stock actually plunged over 14% just 2 days later, on July 11th.
Why the quick reversal?
It seems like, well, maybe the market digested the FDA meeting news and just reset expectations. Realized, okay, phase 3 is coming, but that's a long, risky road still. Despite that drop, though, the company pushed forward. They submitted for breakthrough therapy designation for DLB based on that good SHIMMER data.
And that designation, if they get it, could speed things up.
Potentially, yeah. It can accelerate the FDA review process, so
Yeah.
a big deal if it comes through. They also expanded other regulatory filings for DLB. Then came August. Things started to calm down a bit. August 25th, they regained compliance with Nasdaq's minimum bid price rule.
Staying above $1 a share, why is that so important?
It's more than just optics. Falling below $1 can trigger automatic selling by some funds, and it limits who can invest. So getting back above that removes a major hurdle. And that, plus the clinical progress, the filings, it started to rebuild some confidence. We saw more positive analyst notes, renewed institutional interest, even with the cash burn.
Okay, so let's talk more about that financial health. You mentioned the Q2 loss. As a clinical stage company, we don't expect profits, but what's the runway look like?
Right, no real product revenue yet, mostly research grants. Q1 2025, they brought in about $500,000, which was actually down from $1.2 million the year before. Again, not unusual as grant funding shifts. The net loss in Q1 was $8.4 million, slightly up from $8.2 million year over year, mostly driven by higher R&D spending.
So no profit margins, no forward earnings to really analyze here.
Not yet. It all hinges on future trial success and getting those regulatory approvals. Cash-wise, as of March 31st this year, they had $32.5 million in cash and equivalents. Total current assets were $36.4 million, liabilities $13.8 million. Their cash flow from operations was negative $9.1 million for Q1, reflecting that heavy R&D investment.
But there was that recent fundraising.
Exactly, the game changer. In August, they did a direct offering, expected to bring in an extra $27.9 million. That cash is specifically for the Phase 3 programs and general operations. It significantly extends their runway. And, crucially, they have no long-term debt. That's a real positive, gives them flexibility you don't always see.
The oil capital raise definitely buys them time. But time isn't everything in this race. It's a crowded field. What makes Cognition Therapeutics, and specifically zervimazine, stand out?
That's the core question, isn't it? The neurodegenerative disease space, Alzheimer's, DLB, AMD, it's incredibly competitive, a graveyard for many drug candidates. But zervimazine has a different approach. Its mechanism of action targets the Segli receptor, sigma-2.
Okay, and how is that different from, say, the amyloid or tau drugs we hear more about?
Well, a lot of the focus has been on clearing amyloid plaques or tackling tau tangles with, let's be honest, pretty mixed results overall. The sigma-2 receptor pathway is thought to be involved in things like cellular stress and synapse function. So the idea is maybe zervimazine could help restore cognitive health more directly, not just clear out the downstream problems. It's a novel angle.
So a differentiated mechanism, and the FDA giving the green light for phase 3 adds weight to that.
Absolutely. Getting past phase 2 is a major hurdle. So having the FDA confirm that phase 3 path based on the phase 2 data, it does de-risk it somewhat in investors' eyes. It differentiates them. But, we have to keep stressing the risk. Phase 3 is the big test. Many drugs fail there. So promising mechanism, yes. Edge, yes. Guaranteed success, absolutely not.
Right. Okay, looking forward then. What are the key things investors should be watching? Catalysts, potential hurdles in the next few months?
There are definitely some dates to mark on the calendar. September 30th is the deadline for Q3 institutional holdings updates, the 13F filings.
So we'll see which big funds are holding, buying, or selling.
Exactly. Always interesting to see what the smart money is doing, especially specialist biotech funds. Then October 15th, that's the target for their Q3 2025 earnings release. We'll get updates on cash, burn rate, maybe clinical timelines. October 21st is roughly when ETF quarterly rebalancing happens. Sometimes that can cause some automatic buying or selling pressure. And then a big one. November 11th is the anticipated date for starting those phase 3 trials for zervimazine.
Initiation of phase 3. That feels like a major inflection point.
It really is. So yeah, expect a lot of focus around the Q3 earnings and that phase 3 start date, and seeing if more institutions build positions, especially after they got back onto Nasdaq proper, that could add support.
Now, beyond those known dates, biotech always has rumors swirling. Anything specific floating around for Cognition Therapeutics?
Oh, always. It's part of the territory. One big one is the potential for a partnership, a major pharma company coming in to co-develop or license zervimazine.
That'd be huge, right? Validation and resources.
Massive, both financially and strategically. There's also speculation the FDA might expedite the review for DLB, given that breakthrough therapy request, faster path to market, potentially. We also hear sort of unconfirmed chatter about hedge funds maybe accumulating shares quietly, betting on positive data down the line. And lastly, there's always the possibility they announce exploring zervimazine for other conditions, maybe Parkinson's dementia or dry AMD, expanding the potential market. Again, mostly speculation, but these are the kinds of things that can really move the stock if they materialize.
Makes sense. But let's talk risks. Every investment has them, but biotech seems to have its own special category. What are the big ones here?
They are definitely significant. Stock-specific, the elephant in the room is phase 3 failure. If zervimazine doesn't hit its endpoints, the stock could, crater. That's the reality. They also rely heavily on raising capital periodically. Until they have revenue, they need cash infusions, making them vulnerable to market downturns or poor sentiment. And safety signals. We saw those transient liver function test issues in phase 2 affected about 9.6% of participants. If those persist or worsen in phase 3, that could cause major regulatory delays or worse.
And beyond the company itself, sector risks.
Yeah, CNS drug development central nervous system is just notoriously difficult. High failure rate historically, even in late stages. Plus, the whole biotech sector can be volatile. If capital markets tighten up or sentiment turns negative on biotech generally, it gets much harder for companies like Cognition Therapeutics to raise money when they need it.
Okay, so pulling all this together, what does it mean for someone thinking about investing? How do you even value a company like this right now?
Great question. And the answer is you can't really use standard metrics. Price to earnings. Meaningless with negative earnings. The company's value is almost entirely tied up in the potential of that pipeline, specifically zervimazine. We can look at price to book. It was around 1.3 based on their June numbers, market cap around $110 million, book value $84 million. That's kind of typical for a pre-revenue biotech, but doesn't tell you much about future value.
So it's really trading on hope and milestones.
Pretty much. Hope, pipeline potential, milestone risk, and how much cash they have left in the tank. That's what drives the valuation day to day.
But what are the analysts saying? Insiders. What's the general vibe?
Analysts who cover small-cap biotech tend to rate it either hold or speculative buy, which, perfectly reflects that high-risk, high-reward situation. Insider activity. We saw Director Jack Qatar get and keep about 34,000 restricted stock units back in June. That's generally seen as positive, aligning interests. Haven't seen any major insider selling lately. Social media sentiment is mixed, as you expect, but it did seem to get a bit better after that recent financing deal since it shored up their cash position. So if I had to give it an overall rating, maybe a 6 out of 10. It absolutely fits that high-risk, high-reward profile of an early-stage clinical biotech. The recent cash raise is good, helps them push into phase 3. The early data looks encouraging, and the mechanism is different. But the lack of revenue, the cash burn, the huge reliance on phase 3 success, it means this is really only suitable for investors with a high tolerance for risk, a long-term view, or specific expertise in biotech.
So definitely not for the faint of heart. Short-term traders might play the news spikes, but the real story unfolds over years.
Precisely. The core value depends entirely on getting through those late-stage trials and navigating the regulatory path.
Okay. We have definitely covered a lot of ground today on Cognition Therapeutics. Clinical progress, the financial picture, what's potentially coming next, and those significant risks. It really is a mix of big promise and big uncertainty.
It is. And maybe connecting this to the bigger picture, it's so important for listeners to remember investing here is fundamentally different than buying stock in, say, a big tech company or a consumer goods giant. You're not investing in current earnings, you're investing in future scientific potential, betting on research and regulatory outcomes. Which brings up, I think, an interesting question for you to think about. How do you, as an individual investor, balance that incredible potential of medical breakthroughs with the very real financial risks and uncertainties inherent in developing them? It's a tough balancing act.
That is a fascinating thought to mull over. How do you weigh that potential against the risk? We hope our discussion today gave you a clearer picture of Cognition Therapeutics to help you think through that. Thanks so much for joining us on Investing Talk Podcast. We'll be back soon with another look at what's moving the markets.